All right, we'll flip around the commodity space. Let's join Peter O'Connor from Shaw & Partners. Peter, good afternoon to you. Can we start with gold? You're wearing your gold tie. It hasn't done us any good today because that sector is being punished severely. What are you seeing?
Good afternoon. Yes, I have worn the gold tie, and yes, it will work. It's just not today. So gold, the commodity, should be trading substantially higher than where it's trading today. I would have said this last week or the week before. So based on the traditional correlations of real interest rates, gold should be trading at $2,000, if not more, in US dollar terms. Why is that the case? Back in August last year, when real interest rates were at this level, or close to this level, gold price was trading above $2,000 an ounce. So given real interest rates are more negative today than they were then, gold price should be higher. And it's been an aberration for probably the last month to 5 weeks, going back to when the Fed had that taper tantrum around the 16 June FOMC meeting in the US. And gold's been struggling since that time. So yes, there was a strong pullback this morning. It's recovered some of that ground. So a little bit of stop loss selling seemed to be the order of the day in the morning. And gold has looked weak, but looking across the commodity space or the equity space, in my area, the cheapest commodity is gold relative to how it trades normally. And the cheapest equities are gold equities. Now, clearly, you need a tailwind for those two things to go up. And I think we've got the right backdrop money printing, real interest rates, but the jobs report on Friday really did dent that gold outlook, and it pushed the reflation trade. But the counter to that is China data is looking at best mixed, but more likely a little bit weaker, so it should support the gold trade. So I'm kind of in the crosshairs of some mixed views at the moment, but gold certainly looks cheap. So I'm staying on the side of I like the look of gold, doing some digging, and areas where they're at a 52-week low catch my eye, and it's just trying to triangulate what makes that turn, and it feels like we're in the right turning point. Just need a catalyst.
All right, so you are seeing some buying opportunities there. Any particular companies that you would go for?
Yeah, look, I do. Coming out of the reporting season we've just had last month with the quarterlies, plus the diggers and dealers last week, where 49 companies were on show, including all the major gold companies. The ones that caught my eye were Regis Resources, ticker RRL, at the sort of mid-range. They've mapped out a story now which the market hasn't been anticipating, i.e. longer life at their current asset in WA, a pathway to develop their new mine in New South Wales, and a great acquisition which has delivered cash in its first 2 months that they've had it. So those three things joined together a little bit better than what the market was expecting. So I'd say Regis. And also at the bigger end, across Northern Star, Newcrest and Evolution. Evolution delivered a really impressive pitch last week at Diggers and Dealers. Didn't rely on the Tesla effect or forward-facing commodities or copper. And they mapped out a story based on their recent acquisition history, which is looking to deliver a substantial shareholder return. So I like the look of Evolution at the larger end. Newcrest as well, for that matter, and Regis. So they're the standouts for me. And at the smaller end, it would probably be the likes of Geopacific Resources. We follow here as well as Matador. So quite a range from the big end right through to the small exploration end that catch our eye.
All right. I just noticed from your note too, you're saying as far as shorting is concerned, Bellevue Gold has crept to the top of the list there. Why is that?
Yeah, look, it's fascinating. Going back even just a little bit less than a year, the most shorted stocks in the market were resource stocks, and they were all the lithium plays and the graphite plays and some of the nickel plays. And what's now the bottom of the table, it's all those stocks. So the one that sort of crept back up, and it's been quietly doing that, is Bellevue Gold. I think there's been a lot of expectation in the likes of Bellevue Gold. So it's trading now at one of the most shorted resource stocks. Not a high level relative to where things have been in the past, but nonetheless, it's one of the highest. And it's also at the higher end of its shorting range. So people are picking on that one, and it looks like it's that expectation versus what could potentially be delivered. And when you talk a long and a positive story about a company, you've got to deliver, and that's where they're in that category now. They have to deliver some big ounces, big production numbers as they start their operation over the next year or so. So I think it's a little bit of maybe expectation and reality just a little bit out of whack at the moment. So maybe a bit of an adjustment there for Bellevue Gold coming.
Okay, so Peter, given we're now in reporting season of the miners, which ones are you looking at this week?
Oh, look, a good week this week because there's a good spread. So we've got iron ore we can talk about separately, but there's some great headlines out of iron ore last week given the fall. And we've got a major player in iron ore, MinRes, tomorrow coming out with their results, and then following, Coronado coal, which is in the metallurgical coal space tomorrow, followed by Mineral Resources in the iron ore and lithium space on Wednesday, and that's a great opportunity to look at the two ends of the resource market. Iron ore has been the winner over the last year, 2 years, and delivering great earnings and dividends to most of the major miners that are out so far globally. And tougher story though from here, where does iron ore go and what does that mean to earnings? And then countering that is metallurgical coal, or coal as a basket. It's been the best performing commodity from when China started jawboning commodities lower in May. Metallurgical coal prices up 70%, steaming coal prices up 60%. And we should get some good feedback from Coronado just how they're tracking. And I bet they wish they were getting the prices today a year ago, because they wouldn't have had to do that deeply discounted equity issue just recently. So some quite important telltale signs will come out of both the coal market, how that's travelling, and also that iron ore market, and how MinRes manages expectations, which will likely be potentially lower from here from their iron ore business going forward. So and maybe some comments that are quite useful to fit in with some of the majors on lithium, what's happening in Australia with their tight labour market in WA as well. So only a couple of companies, but some pretty important ones this week in the reporting season.
All right. Hey, Peter, that was a great wrap. Thanks for joining us. Always interesting to see what's going on in that space. Thanks for joining us from Shaw and Partners.
Thank you.